I'm John Hanna for CityTV.net here in New York City, and we have Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. Good afternoon, sir.
Good afternoon, John.
So,
and happy Valentine's Day.
Oh, yeah, I forgot. Oh, boy, that's tomorrow.
One of the biggest chocolate days, well, of the year.
See, there you go. I did not know that. What do you have for us today?
Well, I mean, the markets last week were kind of concerned about whether Greece would, fulfill conditions, to get their second bailout. Brought on the first down week of 2012. So last week, we had the first down week for the year. Domestic equity indexes, except for the Dow, which had a down week in late January. So, year to date, though, the markets are still up 4.78% on the Dow, about 11.5% on the NASDAQ, 6.8% on the S&P, and the Russell Small Cap up about 9.8%. As we speak right now, John, on February the 13th, around 12:45 on the 13th of February, the Dow is up about 0.5%, as well as the other indexes at this point. So, really we're seeing a continued improved market. Some would argue that we've had such a nice run since the first of the year that we're due for a pullback, and I think that would be healthy for the markets. Especially the NASDAQ 100. NASDAQ stocks have made significant moves with very little downside all year. And so a healthy pullback here, 5 to 10%, would be, I think, in order. Like I mentioned last week, headlines was all about the Greece's coalition, that reached the agreement on the austerity measures, and they had to do that to receive their second bailout from its peers. And at the insistence of the Eurozone's finance ministers, the agreement was approved by the full Greek parliament. Now, to protest the measures, Greece unions called for a 48-hour strike over the weekend, and demonstrators took to the streets. So it wasn't a pretty scene. People will be losing some of their pensions, and other cutbacks in government spending will affect the residents and citizens there. Then we had, at home, we had the 5 major banks agreed to pay $26 billion to settle a suit by 49 state attorney generals and federal officials over faulty foreclosure procedures. 9 other financial institutions are also in negotiations over the same issue. And according to the agreement, basically, you got $17 billion will be used over the next 3 years to assist homeowners, and 60% of that amount will help reduce principal on qualifying mortgages. According to the Commerce Department, it had higher inputs of auto parts, and industrial machinery helped push the U.S. trade deficit to $48.8 billion, the highest level since June. Imports rose 1.3%, and exports were up about 0.7%. So it was pretty light last week as far as economic data. As we look ahead, I think the European growth data on Wednesday's meeting of the Eurozone finance ministers will be, an eye on the week of this week. And then also final approval of the newest Greek bailout is expected in the wake of last week's the parliamentary vote. So that'll pretty much be the focus of attention. Then we also have some key data and releases. We have retail sales and business inventories on the 14th. We have the Empire State Manufacturing Survey, industrial production, and the Federal Open Market Committee minutes on the 15th. Then we have housing starts, wholesale inflation, and Philadelphia Fed Survey on the 16th. And then Friday we have the consumer inflation index of leading economic indicators, and we have options expiration. So we've got a pretty busy week as far as economic data and figures, along with expiration, which volume typically is higher on those days. As I said, John, Investors should continue to look for potential buying opportunities, stocks that are, have come off their highs and are, starting to move higher. But the general markets, like I said, could be poised for eventual pullback, which would be healthy for the longer-term trends.
Alrighty, there you go. That's Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. And I'm John Hanna for CDTV.net here in New York City.